And the P&L was for the balance sheet. Yes, I think so. So we've got our statement of comprehensive income, aka income statement. Now, simple words. Income statement calculates all the money, all the income the business is generating. Okay. So how do we make those calculations? So this is called your statement of comprehensive income. And the very first thing in your income statement comes your sales revenue. So whatever your sales revenue is, so the number of units sold multiplied by the selling price. So units multiplied by the selling price is equals to your sales revenue. Okay? You minus that with your cost of goods sold, your cost of material. Once you minus these two things, you get your gross profits. Okay? So what is your gross profit? The money that is made when your revenue is, when your cost of goods sold, your cost of raw materials is minus, deducted from your sales revenue. Okay? So that's easy, right? So it's your gross profit. It's the money that the business made before paying any taxes or any other costs, is just the cost of production and the sales revenue. Clear? Yes?
Kinda, yeah.
Okay, let's give you an example. Again, t-shirts. Some reasons, something I'm obsessed with. T-shirts. I sold 1,000 units of t-shirts, and each t-shirt, the selling price for each t-shirt was $2. How much sales revenue did I make?
2,000.
Yes, $2,000. Okay, that's my sales revenue.
Okay.
But in order to make those 1,000 t-shirts, I had to purchase, this stands for cost of your goods that were sold. Okay, we sold 1,000 units. What was the cost of making these t-shirts? $300. Okay, so when I want my gross profit, I simply minus the cost of material from the sales revenue, and I get my gross profit. What's my gross profit? It's just 2,000 minus 300. What's my gross profit? Are you there? Can you hear me?
Sorry, you were glitching.
Okay, I'm gonna ask you the question again.
Okay.
What is my gross profit here?
Okay, so wait, would it just be 1,700?
Exactly. Okay. So in the end, what do we define the gross profit as? Gross profit is the profit the business makes when you deduct your cost of production with your sales revenue. So the cost of goods that were sold, when you minus that with your sales revenue, you get your gross profit.
Okay.
Okay?
Yeah.
Okay. Um, I'll tell you both. Now, when you want to calculate your sales revenue, the formula to calculate your sales revenue would be the units sold multiplied by the selling price, right? Let me write the whole.
Yes.
Sometimes we don't know what the cost of goods sold is. It's not clearly given, so sometimes we have to calculate it. So how do we calculate the cost of goods sold? It's your variable cost per unit multiplied by the quantity. So, okay. So I'm going to give you a more complex question here. Okay, so these are your three formulas. Clear? So let's give you an example here. For example, I sold t-shirts, sold 1,000 of them. Okay. The selling price was $2 a day. The variable cost, okay, the cost to produce each t-shirt was 0.5 cents. Okay, let me make it easy. $1. Cost to produce each t-shirt was $1. Now I want you to calculate the sales revenue, the cost of goods, and the gross.
Okay. Sales revenue would just be 5,000.
Okay, very good.
Would
Okay.
the COGS be 1,000?
Cost of production, variable cost multiplied by 1,000. $1,000 is going to be cost of goods, and then what's my gross profit?
Okay, yeah, got it. 1 second. Then it would just be 4,000.
Exactly. Do we get it now? Easy?
Yeah. Yeah.
Okay. Now, the next step. So when you're making a profit your income statement, this is going to come in like a whole chart. Okay. But in the exam, by the way, you don't have to make the entire income statement. It's probably usually chunks, little chunks. Now, after the business has calculated their gross profit, what happens is that I'm going to move this. Just give me a second. I'm going to try and move this here, and then I'll try. Not a fan of this. Hold on. Still bad. That means a 5, 1 year, and a 5 there. Yeah, and then we get, I think, okay. All right. This is it. Now you want to calculate your operating profit. Once the business calculates their gross profit, then they calculate their operating profit. Now your operating profit is made after they deduct all the other expenses like rent, bills, salaries, everything. Other expenses are deducted. So the next step is gross profit less gross profit less gross profit minus other expenses. That is going to give you your operating. Okay. So if right now my gross profit was $4,000, and after paying my if the let's say the salary for the month was $100, I have like two employees, and then I paid the bills for $200, and what else can you say? And then I took a small loan as well, loan interest. I paid $100. What is my total expense? $400, yeah?
Yeah.
Yeah. So this will be, so this is less here, expense is equal to 400. So now, what's my operating profit?
Uh,
Wait, uh, um, 36? No, yeah, 36. 36, 36, yeah, 3,600. $3,600 is my operating profit. Okay, makes sense.
yeah.
Okay, so what is my operating profit? If operating profit is the money that I make, so operating profit is gross profit minus expenses is equals to operating profit. Okay, the two very important ones are the ones highlighted in blue. Operating profit, gross profit. Okay, so once the business calculates their operating profit, that will be it for them. Sometimes after this, what happens? You deduct the tax, you deduct the shareholders' dividends, you deduct everything else, and then you finally get your retained profit. You know, this operating profit, you're not taking it home. You have to deduct the taxes on your um, shareholders' dividends if you're a limited company, and then whatever money is left in the end, that's what you take home. Okay, but for now, all you need to know is these two. These two are very important. Okay, clear?
Yes.
So, statement of comprehensive income, revenue, cost of sales, gross profit, etc. So this always is going to be the same order. Sales revenue minus cost of sales is equals to gross profit. Gross profit minus expenses is operating profit. Okay? And that's where it stops for IGCSE. For A levels, it goes further.
Got it.
Okay, so make sure you learn and remember how to calculate the GP and the OP because you
Yeah.
will not be given the formula in the exam. Okay,
Got it.
so this is it for that. I think how much, yeah, I have 10 minutes. I can do before the statement of financial position. I'm gonna do two ratios. Yeah, I'll do income statement. I'm gonna do two ratios with you because they're related to this. Okay. So I'm skipping the next chapter and I'm going to the one after.
Okay, no worries.
So usually what happens is that businesses, once they calculate their gross profit and their operating profit, then they want to, this is going to be a number. Okay. But what they want to know is, usually, they want to know it in terms
Sorry,
of
can
a
I just get a glass of
percentage.
water really quick?
Yes, you may. Sure.
Okay, sorry, go ahead.
Okay. So whenever a business, when they calculate it in terms of numbers, then they want to calculate it in terms of a percentage as well. So when they want to take it out in terms of a percentage, they have this separate formula for that. Now, they want to, when they want to take a percentage out for gross profit, they call it the gross profit margin. The difference between a gross profit is and gross profit margin is that these are the percentage ratios. Okay. It shows you the proportion of revenue that is turned into profit. Okay. So out of your 100% of revenue, how much percentage was the gross profit? How much percentage was the operating profit? Okay. Your gross
But
profit
what
will.
is,
Mhm.
sorry, go ahead. No, go ahead.
So your gross profit margin and the gross profit is always going to be higher than the operating profit. Why? Because it's basically your net profit, right? It's basically the rough profit without the expenses. Okay, you haven't deducted anything. So this is always going to be higher than this one, which is logically making sense. So how to calculate your gross profit margin? That for that you will always need the gross profit. So it's going to be the gross profit divided by the revenue multiplied by 100. So for instance, for this particular business, if we are looking at the revenue of $5,000, my gross profit margin for this business would be the gross profit divided by revenue multiplied by 100. That means it's, tell me what I should do. So what's my gross
So it'd
profit?
be no, the gross profit. Okay, so it'd
Mhm,
be wait 1 second. It'd be 4,000
mhm,
over.
mhm.
Our rev is not here. Where's
Revenue,
the revenue? Yeah, where's the revenue?
sales revenue, it's always the first one
Sorry,
on
yeah,
this the
I
line.
was, yeah, okay, so that would be 5,000. So 4,000 over 5,000 times 100. Let me do it really quick.
Mhm.
So it'd be 80%.
80%, which is super amazing. Out of the
Yep.
100% of your revenue, you make 80% of gross profit. How cool is that?
Yes.
So the gross profit margin is a calculation that shows a proportion of revenue that is turned into the gross profit. Okay, clear?
Got it. Yes.
Then we have the operating profit margin as well. Same formula, just replace it with the other one. So operating profit margin. That's the same. Operating profit. Okay. So what happens here? Operating rev. What's my outstanding? What's my operating profit here?
3,600 divided by 5,000. 1 second. So 72%.
Now, even though this is also really good, but it's always going to be lower than the GPM. Why? Because this is giving you a realer picture as compared to your expenses. It's always going
Got
to give
it.
you a lower one, right? Because you're cutting down the uh, expenses here as well. So in the end, you are kind of done with that as well because we got operating margin and this both these out of the way as well. Okay, so
Yeah.
your job is going to be to go over this chapter and your break-even chapter thoroughly from the textbook. Okay,
Okay. Okay.
yes. Okay, one more thing. Just
Yes.
one more ratio, one more percentage formula. Once you have that, then we're good to go with everything. Then we're done with this chapter as well. So there is one called return on capital, aka your ROCE, return on capital employed. Okay. How do I calculate my ROCE? What does it actually mean? It simply means what return did I get based on how much money I had invested. Based on the amount of money I invested, how much did I actually make in return? How good was my investment? Okay, it measures your ROCE measures how effectively a particular business used the invested capital, capital, capital to generate profit. Okay, it's all about how efficiently you use the invested capital to generate profit. Okay, so the
Okay.
formula for this is also very simple. You will definitely need to calculate your operating profit. So you need your operating profit, not the percentage, not the margin, the profit, divided
Yeah.
by the money you had invested, the capital employed, multiply by 100. Okay? Your RCE is going to then give you a clear answer of how efficiently you made money and how efficiently you converted that investment into profit. This is going to help you compare performance not just with the business itself from its past years. So last year our we were this percentage efficient. This year we are this percent efficient. We're just comparing with ourselves. Last year I was 35 kg. This year I am 38 kg. I gained weight. Yay, right? So you're comparing with yourself, but you can also compare yourself with the competition. How efficient is the competition? How efficient have you been? So the ROCE is useful because it helps you compare performance, okay? And it helps you,
Understood. Yeah.
gives you a clear understanding of where you might be messing up. So your job is to revise, reinforce, go over this topic as well. In the next class, we're going to do
Sure.
balance sheet and we will be done with finance. Okay.
Sure. Okay. Perfect.
All right. Okay. Perfect. See you
Thank
then.
you.
Bye-bye.
Bye. See you.
Hello, Malik. Can you hear me? Is that how I say your name? Did
Hello,
I mess
miss.
up?
Hello,
Hi.
miss.
How are you?
Fine, good.
How was your
Um,
weekend? Rather, your weekend.
actually, good, not bad.
Good. What did you do?